So following up on a previous show, I did mention I like the chippy of these YieldMax ETFs that announced on Tuesday and pay on Thursday. Or that they like to call them the group ones. You got chippy, GPTY, YMAG, YMAX, LFGY, the QDDTY, STTY, RDTY, and the ulti salty, and then the FIVI and the FEET. So for YieldMax followers, those are the group ones that announced on Tuesday and pay on Thursday. They recently announced their distributions yesterday. For the most part, they're somewhat standard, I think. They got some volatility in them, but not too much. If you want to ever look at them, if you go to LFGY, for example, you can see the distribution chart. It's actually decent on the 15th. The most recent one was, just checking quick, was 57 cents again. So pretty good in LFGY, but there's not a lot of volatility. They pay every week. Every now and then you get a good one. Recently, they've been pretty good, but somewhat not a ton of volatility, within 10 or 20 cents on a weekly basis. But for these ones, I don't actually have the next distribution hit until ex-dividend date. It actually is the owner of the ETF, or the owner of the ETF is actually entitled to it. So when these update, you won't actually see the distribution update until ex-dividend date. That strategy is just a little bit easier to implement than having it show up right away like I do for the single stock ETFs. But overall, I do got a chart somewhat similar to what I got for the single stock ETFs that basically compares all these. And I made this one a bit more complex to show a little bit more. You can see by the tab description what's showing. So to start off, we got the current distribution. Just a note, I said ex-dividend date, it will hit. So like FEET and FIVI, they announced they didn't have a distribution last week for some reason, but this week it was like 36 cents for FEET and 53 cents for FIVI. But that said, this chart doesn't actually pull that data into ex-dividend date. So when it says recent dividend, it's actually showing its last monthly dividend for FEET and FIVI. So for purposes of that, I'll take those ones out for this analysis. As this one shows last week's distributions, which are somewhat close to this week's, but you can see if you do it on a percent return, take out FIVI as well. If you're an investor looking to get the biggest bang for your buck in terms of percent return and what you invest that week, you of course got ulti at the top, STTY at the bottom. Ulti was paying about 1.82%, then it was LFGY, then YMAX, YMAG, Salty. Then we had Chippy and GBTY, if it interests me, if you look at the total return metrics for those since inception, as well as for the last month and 3 months. I'll show those a little bit later, but I'll take a little bit look at those further. Then these are the DTY stocks, RQ and S, all kind of a bit lower. And then you can see the annualized return metrics as well. Since inception, if you go total return, we do got the two options. We got no reinvested dividends here, and we got reinvested dividends. So if we're just looking at no reinvested dividends, and this is from inception, so it's on apples comparison, of course, because some of these ETFs have been around a bit longer than the other ones. YMAG, for example, has been around since early 2024, whereas something like Salty has been around since August of 2025. But if you want to look at it from inception date, you got YMAG leading the way. And then actually Chippy is like second, despite only being around since April of 2025, which is actually, like I said before, a bad time to come out because it was right before those Liberation Day tariffs and the whole market tanked. So I find that pretty good, or pretty phenomenal based on the inception date being when it is. And then, of course, YMAG, or YMAX, and GPTY, LFGY. And at the bottom, we got Salty, because that's kind of in the inverse of Ulti, which hasn't been very good in the bull market. And then FEET and FIVI also not doing very well. Actually, with no reinvestment, Ulti, since inception date, Ulti, FIVI, FEET, and Salty are all negative total return, assuming no reinvested dividends. If we throw in reinvested dividends, YMAG and YMAX are the highest, mainly because I think YMAX jumps because you got the reinvested dividends, it's been around longer than Chippy, so then Chippy falls to third. And then in this case, Ulti with reinvested dividends actually has like 10% return, total return with reinvested dividends, whereas no reinvested dividends, you actually have negative return. But Salty, FEET, and FIVI, even with reinvested dividends, are negative since inception date. And then a couple other items is for those who are interested in seeing so now they're on a weekly basis. I figured it was helpful to track what the cumulative dividends have been on a monthly basis, 2-month basis, 3-month basis. So you can see if you do cumulative dividends on the 1-month basis, that adds it up for you. And then the percentage-wise is the next column. If you look at 3 months, look at a cumulative dividend, for example, for LFGY at 6.02. That's 16.77% of the current price. So there might have been some volatility in the actual ETF price. So I'm comparing it to the current price. Somebody could probably argue you should compare it to the price that the ETF was at the start of the 3-month period. That also makes sense. But I do got total return metrics as well, so that those tabs take that into consideration. But if you're interested in these, you can see what ETFs have paid the most over 3-month, 2-month, and 1-month periods. And if you want to normalize the data and look at it as a percentage, so like 3 months, which of these ETFs have paid the highest percent? it's going to be ULT followed by LFGY followed by YMAX. Salty, one thing to note, if it's 0, Salty hasn't been around enough to have a 3-month total, so that's why it just goes default to 0. So any 0 items just mean that the fund has not been around enough to actually have data, so just keep that in mind. And then I also got, instead of trying to fit all this in one graph, I got 1 to 3 months in this tab and then 6 months in 1 year. You can see the only funds that have been around for a year are ULT, YMAG, and YMAX. And the percentage for ULT is pretty stellar. It looks stellar, I guess, at 123%, or 123.58%. But that's based on the current ULT price, which last I pulled it in was $4.99, might be a little bit lower right now. So the ULT share price has gone down, which makes the percent seem higher. But in 1 year, it did pay a cumulative dividend of $6.17. So last year, it paid more of a dividend than the current ETF price is currently. And then for those interested in total return metrics, I find these pretty useful. But I got the 1 month, 3 months, 6 month, and 1 year. So you can see on a 1 month basis, if we're going to sort this, once again, we got no reinvested dividends, reinvested dividends. The chart here shows no one reinvested, or all the charts are based on no one reinvested dividends. So we filter this, we see the best for the month has been CHPY, which total return, which means the increase in the ETF price or the change in the ETF price plus the amount that was paid in distributions. We got CHPY at 5.35% for the month. ULT, FEE, and FIVI all kind of at the negative 5% for the month. YMAG and YMAX slightly negative for the month. If we go out 3 months, and once again, no reinvested dividends. This is where I was looking at CHPY. You got a 15.42% return, no reinvested dividends, 16.31% return with reinvested dividends. FEE, FIVI, and ULT, all negative, no reinvested dividends for a 3-month period. ULT is in the popular item at the moment, but you see the performance has really not been there to justify the interest and really the fund size with a negative return over 3 months. Whereas CHPY, YMAG, and the GPTY have been doing pretty good on a 3-month basis. Jumping to 6 months, once again, doing the filter. Salty doesn't have enough data, so that's why that's 0. But CHPY at 45 and 49%, no reinvested dividends and reinvested dividends respectively over 6 months. I did check these. To be honest, I asked ChatGPT, or not ChatGPT, I use Claude for help with the code in terms of pulling the data and making these calculations. I did compare it to some other sources. Overall, it's basically in line with what other sources say as far as total return. And there might be a difference by 1% or something. That, of course, that really, I think, depends on what your exact start date is when you figure 6 months back, what your end date is. Are you taking like today's price fluctuations into account or not? And then also when you get the distribution, like what the exact price that you're reinvesting the dividend at. So some slight variations in those give slightly different results for total return, but they're all basically in line with one another within 1 or 2%. So this is what you're looking at from I guess if we filter it, there we go. Previously I didn't have it filtered. The tops are CHPY and GPTY by far outpacing a lot of the other stuff. Although YMAG, LFGY, they're quite well, total return over 6 months, kind of in the 32 to 36%, depending on reinvested dividends or not. And really everything's been doing okay. Perhaps this is the reason ULT, or people start jumping into it. You do see it does get if you go out to the 6-month time frame, you do see the total return metrics are quite a bit better. And you can go check that. I think one of the sites you can use, I think it's called dividendchannel.com. They got a little, if you go back 6 months, so it's October 22nd, so go back to April 22nd, 2025. I'm just doing this on another screen here, and you just see what the total reinvested dividends are. Yeah, they give the total return, what I got in the 30%, just over 30% for total return metrics on ULT in that time frame. So it's definitely been good in the last 6 months. But if you go on a 3-month time frame, ULT's not been as good. It's been flat, almost even negative on the percentages you can see. So hopefully the people are in ULT have been in it for 6 months. If you've only been in it for 3 months, you're probably wondering why everybody's talking about it so much because the return's not that good. But for those who've been in on a 6 month time frame, you can see they got about over 30% return, and that's not annualized. That's over 30% in 6 months. And then on a 1 year time frame, of course, only 3 of the funds have been around that long. But you got ULT, or 1 year you got YMAG, YMAX approaching 20%, about 25% with reinvested dividends, and ULT's at about 12.5 or 19% with reinvested dividends. So that's a look at comparison between the Group 1 funds. And then I also just want to note, I said for CHPY, which has been a pretty good performer as of late, you can see a $5,000 investment at inception. Here's where you'd be at, and here's how you would have done over time if you want to include all data points. You started at $5,000 right off the bat. You had the liberation date. It took you down to $4,500. But if you would have stayed in the investment, you see you took your $5,000 up to, with reinvested dividends, over $7,000. Distributions per share have been, like I said, pretty standard. This, of course, just goes over the 10-15. Once the next ex-dividend date hits here, tonight. So I think tomorrow this will add another bar chart showing what the recently announced distribution was. Of course, it was 50 CHPY. It was 57, almost 58 cents. So it was significantly higher than it has been recently. So I guess that's good to see. The average has been just over 40 cents or over the last few months. And it looks like now it's almost like one of these at that 50, almost 58 cents. So you're going to have a bar chart that shoots way up here. On a total return basis, since inception date, assuming you started with 50, you're down initially, but then recently rocketed up, particularly that month of September. It was a really good month for CHPY shareholders. Maybe I'll zoom out just a bit so we get it all on the screen. But in addition to this chart, I also got the in-depth chart. So for CHPY holders, you can actually see what stocks you own in terms of market value. So right now, the most is, and this is sorted from highest to lowest. You got AVGO, Broadcom, NVIDIA, LRCX, MU, Micron, AMD, TSM, Qualcomm, KLAC, Intel, ACMR, MPWR, AMAT, and the bottom ones are NXPI and TXN and Marvell. Well, yeah, a lot of chip stocks, definitely driven mainly by AVGO and NVIDIA, or Broadcom. I like to say AVGO for some reason. In terms of cash, not a lot of cash, really. You're basically just owning the shares. And I guess if we look at it here. So I got this chart again. So basically what I do is I find out how many shares they have divided by 100 to basically give you their collateral they have for writing calls against. So you can see like ACMR, for example, they got 97,600 shares. Divide that by 100, you got 976 contracts. They use this as collateral to write calls with the strike. So they sold calls at 50. EMR is trading at 38.15. Or sorry, they sold calls at you see the negative. They sold them at the 44 strike. And then they bought some, same number. So they use a 100% credit spread at the 50 strike. This is what this fund's doing. They're buying the shares of the stock. They're using it as collateral. Once again, we got ADI. The stock's currently trading at 238. They sold calls at 245, bought calls at 250. So a lot of times using the credit spread method, and you can see with AMAT and Applied Materials, I believe. You can see they got shares. Recent price was 226. They got a lot of calls. They got calls basically sold on, you see the contracts. That's basically the number of contracts they can sell. You can see they used the 100% of what they could. They sold 149 contracts at the 240 strike. I think all these are expiring at the end of the week. And then AMD. So in this case, they didn't use a credit spread method. They just did a full sell. AMD, they got a credit spread. And you see mostly they're doing credit spreads. I don't like the kind of the color. And Intel's trading about 37. They sold calls at 40, bought calls at 44. So a lot of these credit spreads, sometimes KLAC, for example, they don't got any credit spread. KLAC trading at 1146. They got calls sold at 1180. Hopefully this chart makes sense. It's the easiest way I could think of it, showing what they do. With all these, they're buying the stock and then they're using that as collateral and then selling calls at a higher strike price than where the stock's trading to take an options premium. In some cases, like the MU, the stock's trading at 201. They got the 205 sold. The option premium they took in to sell the 205, they used some of it to buy the 212 calls. That, of course, if MU spikes higher, they get capped at 205, but they start getting gains again at 212.50. So I do like the credit spread method. This one's a little different. Qualcomm, stock's trading at about 166. Of course, it could have changed some today. It looks like it's 169 right now. In this case, they're going over the calls, the current price at least. They got some calls sold at 167.50 strike. And they got some calls sold at the 172.50 strike. So like if you see the different colors, it means they got different strike prices on the calls that they've sold. So that's really look at how the fund's made up. That's in terms of the contracts. I got another tab that actually shows the market value. So ACMR is trading at 37, the 44 call. This basically just shows a market value of what the calls they have sold is right now. And they also show a market value what the calls they have bought are. So if they have any. So this is just the same chart as before, just on a market share basis. Here's it all broken down. You can see everything. So what this shows you is, in this case, I already went over it, but you can just see it all in one chart. AMAT is just selling calls. You can see there's no puts or anything. Like when you got the Ulti fund, this is all just calls. They're selling calls or buying calls. Some of them they're selling and buying. Some of them they're just selling calls. And then right here, so this is another chart I like to look at. This shows where the stock price was. And then the orange here, so the stock here, you can see is in blue. Orange is where we got calls sold and bought. So you can actually see them with the x-axis being like the actual stock price and where the different strikes are relative to the stock price. And that's ACMR. If you want to look at like AMAT, you can just adjust the filter. AMAT, of course, is one where they no credit spread. They're just selling calls using their stock as collateral. But yeah, you can just select these. Let's look at NXPI, for example. NXPI I got current price of 217 or about 218 right now. You can see it's about right where it is. The price, of course, will adjust based on last run the code. So it might be in the morning and there might have been a market day activity. So it might adjust somewhat. But you can see at 217, they got calls sold at 225 and calls bought at 235. So that's how I look at these charts. But yeah, for those who are interested in the Chippy fund, it's been a really good performer as of late. Hopefully that continues. Thanks for tuning in.